Welcome back to the technical analysis video. This is our daily stock trading series. Today we're going to look at Medtronic, the medical device company, and this is November the 18th, 2019, and my name is Eric Lewis. So here's a one-year chart on Medtronic, and you can see that we are currently at highs on the stock. We actually had a pullback today. But we recently crossed the recent high and made a new high. So the new high in this stock is $114 per share, even though we pulled back today to this 111 and a quarter range. Looking at the moving average for the one-year chart, you see that the 10-day moving average is actually higher than the other two, but we have the 50-day above the 20-day, so that's not really a bullish indicator. We really need to see that 20-day pull higher than the 50 to have a clear bullish signal for this stock, and I think a couple of days of green bars would do it. So here's a larger look, a greater time frame of the 5-year price chart of Medtronic, and as you can see, we still are currently at the 5-year highs on this stock. This stock sort of grinds it out and pulls back and grinds out a little higher and pulls back and grinds a little more, and then has an uptrend. And I don't know if we're going into another period of grinding or if we're going to have a period of uptrend. We've had several periods of uptrend, but let's take a look at the moving averages here. And in this chart, all three moving averages are in line to support a higher, a bullish price, really. So you have the 10-week price is higher than the 20, which is higher than the 50-week, or almost that blue line is basically an annual price. So things look bullish using the moving average on the longer term time frame. And speaking of longer term, rather than pull out the good old Fibonacci retracement or Fibonacci analysis, we're just going to stick with this. So this is an all-time view of this stock. You can see that for the longest time, like many stocks that were around then or that were listed then, there wasn't a whole lot of movement during the the 70s. You had a strong recession in the 70s. The 80s were pretty quiet. Increased a little bit, quiet again, and really in the 90s it started to spike a lot higher. And really, I mean, this stock did well right after the internet bubble. So maybe this was sort of a flight to value, if you will, but had a strong 2000, and then just sort of dropped and muddled a bit, kind of grinded it out. So we've seen now, what would this be? Almost 8 years of uptrend in this stock. I mean, that's pretty significant. Certainly nothing to sneeze at. And obviously, over this past year, it's been up and up and up. So let's look at the MACD. So the MACD is pretty interesting. I use this indicator to see if there's clear momentum, either bullish or bearish. And sometimes you'll see scenarios where, like back in July, or actually in late June, this crossover of the two moving averages above the zero line should have led to a bearish momentum, and it really didn't. There were a few days of down movement, and then the rest of this was up, even though it wasn't seen in the MACD. So I'm always aware of the possibility of this indicator giving me a false signal, but right now it's giving me a bullish signal, which I actually don't think is terribly wrong, given the uptrend that we've been in, and that we also recently had near-term high, or had all-time highs in the stock. Now, I'm looking at the 5-year. The MACD on the 5-year is giving me, once again, a crossover. You can see that the price did come off some. These are weekly price bars. The price did come off some, but this also appears like it might be about to cross again and head stronger, which would mean bullish in both of these MACD, both time frames. The biggest thing, though, is this 5-year and even I believe on the 1 year. Well, the 1 year, if you look at it, there is a bit more separation between the blue and the red line down here, which are the two, the 9 and the 12 and the 26 day exponential moving averages. I believe it's exponential for the MACD. I like there to be a little bit of a gap, a little bit of distance between these lines to give a clear signal. When they are close, like they were in late July of this year, it really is tough to get a clear reading. And so that is the scenario we're under right now with the 5 year, is that these lines are really close and it's possible to give some false signals. So as a last sort of look, I always like to take a look and see if there's any support and resistance. And this green bar marks the previous, not only where we are today, but the previous top. I actually think this will become some support for this stock. Typically when you've made a new high and you come back down to tap on it, I think this can end up playing support. And I put second term support down near $104, and some people might look at that and say, well, why is that price relevant? And it really doesn't even have to do as much with the fact that it acted as resistance in late July. It really has to do with this gap move that we felt back in August. A lot of times stocks come back to close that gap up, and that's what we did here in mid-October. But I do see that as possibly being the next level of support before this stock moves higher. I would not get in front of strength on this stock. We are trading at all-time highs, and so it's definitely worth trading with respect to that level. The moving averages, of course, for the 1 year is not in line, but the moving averages for the 5 year are in line to indicate some bullish prices. Fibonacci retracement, of course, is less relevant in this scenario, but looking at the short term and the long term MACD or longer term MACD, I think it's very helpful because we see clear signs of bullish momentum in the short term, and then in the longer term, the 5 year MACD, I think is closer to giving us a false signal, a false sell signal. And I say false because of how close the two lines are. When those lines are further apart, when there's a larger gap between them, I tend to trust the signal a bit more. And then, of course, this is a strong stock. We're seeing strength. I expect there to be strength at the level of this previous high, which is basically where we closed today. And I also think that $104 per share level could end up being our sort of second level of support should prices fall down to that level. But I do suspect we're going to have a stronger season, some new marks of all-time highs, and I guess I'm a bit bullish on this stock. So feel free to take a look. Let me know what you think. And also, if there are any stocks that you'd like me to cover, definitely feel free to like this video, subscribe to the channel, and leave your comment. Feel free to comment, and I will definitely respond if it makes sense. All right. Look forward to hearing from you. Thank you guys so much for watching. Please do share this with your friend. And as usual, happy trading.